What's going on, people? Back with a bang. This is the Money Management, also known as the Wealth Prince, back here to bring you guys another very useful video. So in this video today, I'm going to be showing you guys simple entry and exit levels and strategies for when it comes to your trading. So obviously right now we're in a bear market, and this market is not only a bear market, but it's one of those crazy markets where some days are just suddenly super green at some points, for a couple of hours. Some days are just extremely red. Some days we start off green, then just tank. It is a very bearish market, but also a very tricky market. And what I mean by that is you can't just buy puts at any time and expect to see returns. At this point in time, it's like you have to be very good at trading. And so in this video, like I said, I'm going to show you guys some simple entry and exit strategies that you can use when it comes to your trading. We're going to look at some charts, look at some examples, look at some stuff I've traded over the past week. And hopefully by the end of this video, you guys are going to know a little bit more about charting, entries, exits with your options plays. Now, I know you guys have been waiting for a video like this, so I'd definitely love it if you guys could drop a thumbs up, subscribe if you're new around here. Of course, comment, let me know your thoughts on the video, and definitely share this video with your friends on social media, wherever. I would be super grateful if you guys could do that, because trust me, it takes a lot of time to make these videos. These videos are the sort of things I do in my one-on-ones, in my Discord, so make sure you guys show some support and show some love on this video. Now, to start off with, I'm just looking here on ChatterQuant. Make sure you guys check that out as well. By the way, I've got a link to ChatterQuant in the description. But I'm looking at the earnings plays. And why am I doing that? Well, simply because I know over the past couple weeks, even months, people have traded a lot of earnings. DocuSign, when it tanked, FedEx had a great jump up. Netflix recently tanked. There's been a lot of crazy earnings over the past couple weeks. And I just want to put this out there for options traders. You don't have to trade earnings to make money. There are many big earnings which were announced this week, but you don't have to trade earnings to make money. But as always, make sure you guys just check out the earnings ahead of the week, because maybe if you're trading a stock, then up until earnings you may trade that. You may just need to just check that any of the stocks you're trading or any of the plays you're in do not announce earnings soon. That's always an interesting thing to check. But now let's log on to TradingView. I'm going to show you guys some simple things, give you guys some simple tips, but useful tips that you guys can use going forward in the market. So first of all, we're going to just do this. We're going to look at a stock which everybody knows. I'm going to go with Apple, ticker symbol AAPL. So as we begin, I want to highlight the importance of having a plan. So as I mentioned, we're currently in a bear market, right? But I truly believe eventually the market's going to recover. But at this point in time, that doesn't mean buy everything you see, because things can definitely still get worse. So if I look at Apple stock, right, the first thing I want to do, let's say I'm looking at Apple. The first thing I want to do is zoom out a little bit. So look at the past 6 months. Okay, so we very clearly see that back in July, Apple was around $144. Now it's around $177. If we look on a closer time frame, look at the most recent time. Okay, so 24th of January, yeah, this past week, it was around 158. It's trending up towards 170 now, closing the week strong. But why am I doing this? Well, because someone might see Apple stock and they say, oh, you know what? It's been on the downtrend recently. I'm going to buy puts. Have no idea about support and resistance. Have no idea about levels. But this is the thing. Check this out. Of course, I have this yellow line here. This is a very solid line of support for Apple. As you can see, Apple downtrended in November, hit this line, rose again. Same thing this year in January. Trending towards this $157 line, start uptrending again. That's one thing you need to do when it comes to charting. Check out your support and resistance, because then when you look at a shorter time frame, maybe when you're going to day trade something, you can see, oh wait, Apple didn't break below this line. I'm not going to buy puts yet. And why do I say that? Well, because if you zoom out a little bit, Apple has been on the downtrend. You might say, oh man, it's been downtrending for 2 weeks. Let me buy puts now, not knowing that there's a very solid line of support just here. So make sure the first thing you do with any of the stocks you look at is go and draw your support and resistance lines. Go and draw the support and resistance. Support, resistance. Lines that, or points on a chart where your stock struggles to break below, and then points on the chart where your stock struggles to break above. So that kind of brings me on to the next point. When you have a plan, it's also time to execute. Apple just broke above this level of resistance around 167. And as you can see, Apple was up almost 7% yesterday. So it finished the day strong, right? But look, it could now pull back towards this level of support. So your first thought when you see Apple is, let's buy call options until the next level of resistance. Not really. Zoom out a little bit. Okay, we can draw lines of resistance, for example here. I'm just going to show you guys how you can do that. Just get a horizontal line and pick out here, just around here, 176. And you might want to change that color depending on what you do, but mine's going to be this color, right? I might say, yes, I'm going to buy it now, but no, that's not the case. Zoom in a little bit. Let's check the 1 hour chart and let's check a shorter time frame. Let's zoom in. So you can find out what's happening intraday. Because if you're going to trade this, you probably want to be checking these kind of things. Okay, so it's above the moving averages. Good sign. But get rid of that. But you might say, okay, I'm going to buy Apple's calls now. No, that's not the case. See how it trends very close to the moving averages? Maybe you want to see if it pulls back a little bit. Maybe it pulls back towards this moving average. Maybe it pulls back towards this level of support. That's what you want to see. So if you're day trading this, go to the 15-minute chart, especially if you're trying to trade this in the first couple hours. Zoom in again. Have a look at what the stock is doing. This is what you need to do every single day if you're going to trade something. Check to see what kind of entry you could get. Obviously here, if it pulls back to around 170, and as you've seen it done before, if it pulls back to around 170 and doesn't break below and starts uptrending again at 170 and keeps doing the same thing for a period of 30 minutes, 45 minutes, you know that once it pulls back to 170 again, that will be a good point to enter at 170. And what kind of call options would you get? Well, it depends on what you're trying to do. Personally, I would look at the 172, 174, maybe 175 call options because, again, as we zoom out, our next level is up here. The next level is up at 176, right? And if you're just trying to get a little bit of the green, catch it on the bullish run, then just getting a call which is slightly out of the money, not too expensive, will definitely help you. But what a lot of people do far too often is they see it running up, then they'll try and enter on the 15-minute chart, just enter wherever, then it pulls back, they panic and they sell, not knowing that it's just pulled back to the moving average as it usually does. Look here, pulled back to the moving average. Okay, here it broke below and then pulled back to the line of support. But as you can see right now, it's pulled back to the moving average and started uptrending. So that's what you want to look at. If it can retest, moving average multiple times, get ready to enter when it next retests. Let's look at different stocks so you guys can get a better idea of what I'm talking about. I'm going to look at ATVI because we traded this week in the Discord. So we traded ATVI Activision puts. But let's zoom out. You see it's gone green the past couple of days. Sorry, not the past couple of days. It's gone green the past day, right? Towards the end of yesterday. Zoom out, zoom out, zoom out, zoom out. Check a different time frame. Check 1 hour or 4 hour. Zoom out. Then you can see what's happening because what most people do right now is get puts. Most people would get puts. But you want to see this. That level of support right there. And I did not draw this now. As you guys know, this has been drawn a couple weeks. That level of support, we just pulled back to that level of support and now we're uptrending again. That is very important. If you look at a 4-hour chart, you can see that this is very clearly a nice level of support, right? So when it pulls back to this level and starts uptrending, that is a good sign. Even though it's downtrended for the past 10 days and it was good for the puts, if we zoom in, it was good. It was great for the puts. We traded the puts, got up to 200% returns. Some people got up to 230% returns. Yes, it was good. It was good. We downtrended all the way to this moving average. Now we are uptrending. We've just broken a moving average as well. We pull back all the way to the support. Now we're breaking above this moving average. A breakout could be on. But what you want to see, again, it's a shorter time frame. Have a look at what's happening. Here we go. This is a very good indication of what's happening. Exactly what's happening. This is a great indication of what is happening. Look at it pull back towards the level of support. Then it stayed in this channel between the moving average and the level of support. Stayed in the channel. Started to break above. Test the next moving average. Sold off. Retest. Level of support. Start to uptrend now. Uptrend now is holding above both moving averages and it's very clearly bullish. So expect ATVI to continue rising. But does that mean go and buy it as it is right now and just jump into call options? No. You probably want to see it test this moving average again at 78, 72, which is not a far drop. Look, you might say, I don't want to be late on the play. I don't want to miss out. Look, it's at 79.40 right now. If it drops to 78, 72, 73, that's just a 25, 30 cent drop. You're not missing out on anything. If you can catch the breakout at a good entry, this is how I get my entries, guys. Somewhere around here, when it pulls back to the moving average, when it breaks above the moving average, that's a good entry. When it pulls back towards the moving average and starts uptrending again, or when it breaks above the moving average, that is where I get my entries on these option plays. Obviously, I'm on a 15-minute chart right now. You could also check the 5-minute chart, see what's happening, just get clarification, just get a better indication. Again, see here, pull back to levels of support, started uptrending. See how it was red candles back to back 4 times, got to the level of support, hit a green candle, started uptrending. With a little bit of volume now, it's starting to move upwards. You've got to keep that in consideration as well. Check the MACD. It's showing bullish momentum. 5-minute chart showing bullish momentum. 15-minute chart, go back, take a nice entry when it gets a little bit of a pullback here. As long as you get some good volume, some buying, price action, we should be ready to start the uptrend. It is not that difficult. And of course, it's the same for when it comes to exiting. If it starts downtrending and breaks below these moving averages, it might be bearish. If it gets towards the level of support, you want to see what it does. If it breaks below that level of support, it's obviously very bearish again. It's the same thing for any stock right now. You guys don't want to overcomplicate this. You do not. Because yes, there are many stocks that are dropping off right now. If we look at SPY over the past month, you will see it's very clearly bearish, right? But let me tell you this, look. It's up and down, right? The past few days, up and down. But just zoom out, 6 months. Just zoom out. Sometimes you just need to zoom out, right? And then, okay, I'll just look at the past 2-3 months. I'll just check the 1 month so you guys can see how bearish it is, right? Very clearly bearish over the past month. It was up to 480 last month, and now it's been pulling back ever since. Hit lows of 420 this week. But look, every recession, every pullback, market correction, market crash, it doesn't mean you have to buy the dip right away. Some people would have bought the dip at 455 and then bought the dip at 438 and then it still dipped all the way down. You don't have to buy the dip at every single opportunity, but you still have long-term opportunity while these things are dropping, while these things are selling off. Apple, Netflix, Microsoft, Facebook. You have opportunities, but that doesn't mean you should just buy the dip like I said. If the whole market is bearish, especially in this market, if the whole market is bearish, but you're up on the day with SPY calls, as we were this week, take your money. There's multiple times we were up with SPY calls this week. Especially when you're day trading, take your money. Or if you do an overnight risky swing like we did, which was, I think, until Thursday, so 26th until the 27th. Okay, so we did an overnight swing. And if we just zoom in, this is a trade from the past week that we took. Overnight swing into the 27th of January. So 26th. 26th, we took a swing, right? Right before market close. 27th of January, it opened, it kept going green, and then it got up to levels of 439s where I sold. I can show you guys that on screen. The SPY call option I sold. Guess what happened next, guys? It started downtrending below the moving averages and was clearly bearish again. If you're day trading, take your profits when you're up 40%, 60%, 70%. If you're doing an overnight swing because you have to swing like we did, then it's okay, but make sure you take your profits still. Because until we get a very clear direction of what's happening with this market, you don't want to be risking holding on to profits for too long. You don't want to be risking holding on for contracts for too long. Look at this price action, guys. If we just check the 1 hour chart, look at the price action. You see very bearish, then bullish, then bearish, bullish, all in such a short period of time. Look at yesterday, the close from yesterday. Suddenly, super green candle, up to around 442. You don't need to hold these for too long. Day trading SPY is a lot different to swing trading SPY. Day trading Tesla, Microsoft, Apple, Amazon, any of those stocks is very different to swing trading any of those stocks. And if you just buy and hope, or you just hold and hope, that's not going to get you anywhere. You need to be looking at these charts. You need to be looking at where to buy, where to sell, levels of support, levels of resistance, what the moving averages are doing. All of that is going to help you gauge where to take your trades, what to do when it comes to trading. Having a look at what other stocks do in correlation as well. Maybe two stocks that run together. Maybe if you're looking at SPY, you want to see that it does the opposite to VIX. If you're looking at UVXY, does the opposite to SPY, that sort of thing. As VIX was overextended and it hit 38, well, obviously it was probably going to drop soon, which meant SPY was probably going to rise soon. That's the sort of thing you want to look at. Lastly, let's just have a look at one more stock. Of course, you guys can look at the Qs as well, so you might look at two more stocks, but a firm. I have a clear level of support that I planned out here, that I've written out here a while back. Honestly, it might have been 2 or 3 months ago. We fell all the way down to that level of support. Now we're rising again. It was up 17% yesterday, but I just want you guys to see this. Look at the closer time frame, find out with your levels of support, resistance, what the stock is doing. Look how it fell beautifully to this level of support, rose above the moving average, started to kind of consolidate in between the level of support and the higher moving average. Now it's just starting to break above. It is now, I'd say officially it's bullish. Let's have a look. Yeah, okay, last few candles, it's officially bullish. So expect to start rising again. That's the kind of thing you want to see. And now potentially it could be safe to swing trade this on the upside, towards the upside. Obviously here, as it was trading below the moving averages and selling off continuously, it was on for puts, to swing for puts. But like I said, in this market, you just want to kind of see profit and take profit, especially if things open up really nicely, then you take your profits and move on. So like I said, lastly, let's look at the Qs. Same thing here, same principle. Whatever the overall trend is, just pay attention to that. Now you see I have many different levels of support and resistance based on different time frames. That's the reason for the different colors. But just check this. Zoom out a little bit. I'm going to go to the 4-hour chart just so you can see the overall trend and see how difficult it is to swing this right now. So this blue line is what SPY is doing, by the way. And that's why I said you can look at two things at once just to see, how they run. So if you see QQQ selling off, you might want to also look at SPY puts at the same time. But back to my original point, what I wanted to show you guys. Let's zoom in a little bit. Let's check the past week or two. Just go for the past week, look at the 1-hour chart. I've identified clear levels of support or resistance. That's what you guys need to take away from this. So if we look at it, this past week, let's just look at this past week. So it sold off into this week, all the way down to levels of 333. Then it started to rise all the way up to 353. So that's a $20 gain. Then it sold off. Then it rose. Then it's kind of stayed in this channel while selling off and rising. This is why I say you don't want to jump into some overnight calls and hold for too long, or swing trade something for too many days in a row, puts, calls, whatever it may be. You don't want to try and do that at this period of time. Go with the flow, go with the trend, take your profits where you see them, and move on to the next trade. You can look at your 15-minute to get a good entry. Look at what's being tested, retested, where the price action is, where the volume is. Use these in collaboration with your RSI, your MACD indicators. Your MACD is showing that it's bullish right now. So we're going to see if it breaks above this level of resistance. But hey, if we zoom out a little bit, another thing you can always do. What happened last time it broke above? Oh, well, it sold off. Then eventually it broke above again, but then it sold off again. Now it's breaking above again. I'll see, look what it does. If it finally breaks and hits 356, will I enter calls or puts? Well, it depends. It might sell off, test, retest. Then it'll be puts. It might rise, break above, and continue uptrending. Then it's on for calls. You have to look at these kind of things. The patterns, the charts, use the MACD, the RSI, use your different indicators, your moving averages. That's all the kind of things I do on a day-to-day basis. So that's going to be it for today's video. The last point I want to highlight is look at your shares, guys. Make sure you check out the different shares. Apple, Tesla, Netflix, Microsoft, Amazon, if you can afford Amazon, Facebook. Check out those shares and get them up for long term. Like I said at the beginning of this video, you have long-term buying opportunities right now. There are lots of stocks which are on sale, which are slightly undervalued right now. You can get them for a cheaper price point. So do look to doing that. Add to your long-term portfolio, whether that's for dividends, capital gains, growth, whatever. Do look at your stocks for the long-term buy and hold. But if you guys did enjoy this video and did enjoy this breakdown, then please do check out the stock option starter pack. That is 10 different videos that you have access to for life. It explains the ins and outs of options. It talks about different factors, the Greeks, the trading strategies, my trading strategies. It talks about calls, puts. It talks about all of that kind of stuff. So please do check that out. Again, it's a one-time payment. You have all these videos for life. And lastly but not least, make sure to come and join the Discord if you've not already. But overall, thanks a lot for watching today's video. That's it from me. I got money to make, you got money to make. See you guys next time for another video. Peace.